conversation forward. We've got Rajeev Agrawal as well joining in on the show right now. Rajeev, hi, morning and evening, your time. I guess all the focus, Rajeev, is now on the central bank policy action, and starting off with the Fed seems like 25 bips is par for the course. But I think the bigger question, Rajeev, is if the 25 bips does come in, does money move back to US equities then, wherein we have seen portfolios ease off from their US holdings?
Yeah, good morning, Aisha. No, I think as you're rightly pointing out, the 25 basis points cut is already pretty much penciled in by everybody. I think it remains to be seen how the money moves back into the US market, because clearly the international money has been holding off into moving into the US. And I think it remains to be seen whether the markets become more attractive from that perspective. Clearly the markets have run up. And as we all know, the S&P 500 in terms of the valuations is not necessarily cheap. So really it is more of the trigger and how the US economy sort of gets a boost from a rate cut, which will drive whether more money comes into the US markets.
All right, but Rajeev, along with that, it's not just that we are waiting out to hear out from Fed, but along with that, Bank of England is also having its meet on 18 September. 19 September is when Bank of Japan will be addressing. But help us understand that how do you see the central bank action really impacting the bond market? Because bond market is also getting quite exciting. Do you believe that this is in a way giving some signal?
Absolutely. I think the markets have penciled in multiple rate cuts, especially on the US side. And now everybody is talking about 3 rate cuts in the next 3 meetings in 2025. And if that were to happen, then clearly the cost of capital comes down. And as the cost of capital comes down, the equities start performing even better. And I think that is, again, something once the expectations are set, the valuations start sort of accordingly getting priced, and that is what we are seeing. I think to your point about the Bank of Japan and Bank of England and what sort of decisions they will take, the expectation is there will be a cut on the Bank of England side, and I think that will be possibly good for that economy. But we will see how the dynamics there are, and if there is a rate cut across different countries, I think it will be ultimately good for the equity markets.
Rajeev, you've always been an India guy. Tell me, what's the India portfolio like? Any rejig that you've made? You've got the GST new rates kicking in on 22nd. Any consumption additions?
No real consumption additions, Aisha, for the simple reason that I think consumption basket has already run up, and it was always pricing in decent valuations already. So really, the way we are playing the consumption story and pretty much the improvement in the economy is through the financials. And, financials has a whole spectrum of companies, some price reasonably and others not so. So we are more of the value guys, and we tend towards companies which are much more reasonably priced.
Rajeev, great to have you on the show. Thanks as always for joining in.
Thank you.
Okay, let's just revisit what